Inflation is all around us, from healthcare to groceries, seeing the value of your dollar cut in half over the last 20 years. I can't even afford a dozen eggs anymore. I buy 6 and then put the rest on layaway. So then what does it take to grow your money? What if you could double your money, and how long would that take? I'm about to show you how long it will take to double your money in 4 different investments, with example stocks in each, and one that could double your money in just 4 years. Stick around and I'll reveal an investing strategy to turn $150 a month into $1 million using just these investments. For the video, I'll be using the rule of 72, a little bit of math magic that to nerds like myself is about the coolest thing since Einstein's hair. Now, the rule says you can find how long it takes for something to double just by dividing 72 by the annual increase. For example, if you're sitting on treasury notes with a 3.74% annual return, so that's 72 divided by 3.74, it's going to take almost 20 years to double your money. On the other hand, find something like an Amazon and its 26% annualized return over the last 2 decades, and you could double your money in less than 3 years. Now, of course, you never know exactly what return you're going to get in a stock, but I'm going to be using long-term averages for the investments today to give you a real sense of what's possible and how fast you can double your money. But first, if you're tired of long, drawn-out security reviews slowing down your deals, and I know you are because it's a common pain point for businesses, just steps away from closing that deal, the last thing you want is for it to stall out due to endless security questionnaires. Now there is a solution, because that's where Vanta comes in. Vanta automates up to 90% of the work for security and privacy frameworks, helping businesses like yours get compliant for less than the cost of a manual process. With Vanta Questionnaire Automation, your go-to market teams can complete security reviews up to 5 times faster. So whether your business is a startup, in the mid-market, or at an enterprise level, Vanta can simplify security and compliance reviews to do all the heavy lifting. Over 8,000 companies, including ZoomInfo and Smart Recruiters, trust Vanta to streamline their processes, reduce stress, and close deals faster than ever. Don't let security reviews hold you back. Vanta's got you covered. I want to thank today's sponsor, Vanta, and if you're ready to see it in action, experience Vanta's questionnaire automation with a self-guided product tour. Just click on the link I'll leave in the description below. Back to doubling your money, and folks, behind all the stock picks and discussions we do here on the channel, it all comes down to this. You have got to be growing your money because every second of every day, inflation is eating away at its value. I remember thinking the other day, when Deanna and I got married back in 2009, we were making a big fat $3,400 a month and still able to save after the bills. Now just our house payment is more than that, and it's not like we live in a McMansion. Nation, you have got to be growing your money. It doesn't have to be a huge amount you save every month. In fact, I'm going to show you a strategy that can be used with $50 a month later, but you have got to get started. I feel like I'm preaching to the choir because if you're watching this video, you know all of this. But as a friend and as a part of a family, you need to help those around you understand this too. So don't be afraid to bring it up with others. Let's start with bonds, our first investment example. And at a 4% annual return, I know it's not going to trip your trigger, but hear me out because there are reasons to hold some bonds in your portfolio. Bonds are like a loan to a company or a government that pays interest twice a year. So you're safer than stocks here. Companies have got to pay their bondholders interest, or those investors can go after assets in court. Here, the iShares U.S. Aggregate Bond ETF, ticker AGG, is a fund of different bond investments with super safe treasuries, nearly 40% of the holdings, but also some higher yielding bonds issued by Fannie Mae, JP Morgan, and Morgan Stanley. The AGG has produced a 4% annualized return, just a little above that 3.4% dividend yield, so not something that's going to make you rich, but that slow and steady approach. At that rate, it will take 18 years to double your money. Now, not many people I know want to wait almost 20 years on a 4% return, so we're kicking it up a notch with a diversified portfolio here. For this idea, we'll combine the SPDR S&P 500 ETF, ticker SPY, which tracks that stock market index, and the 500 largest companies in the United States across the major stock sectors. The AGG bond fund here, and then the real estate sector SPDR ETF, the XLRE, which holds shares of 31 largest real estate companies in the United States. The idea here is to give you a little bit of everything. With 60% of your money in that SPY ETF, your money is working for you with the growth that only stocks can provide, and a 12.7% annualized return over the last decade. The 30% of your money in that bond fund, the AGG, is there to give you some safety and a ready source of cash when you need it. Then with the remaining 10% of your money in the real estate fund, with its 7.1% annualized return, you get the cash flow generation that comes from these real estate stocks. So put it all together this way, that 60-30-10 portfolio gives you the higher returns, but Also the safety from that stock market roller coaster, and an average 9.5% return a year. It's more than double what you got from just bonds, but not as risky as going all in stocks, and doubles your money in just 7.5 years. Now, it's not quite the safety of that diversified portfolio, but dividend stocks like the Schwab US Dividend ETF, ticker SCHD, can provide a higher return and cash yield. The fund holds 103 of the most dependable dividend stocks, names you know like AbbVie, Coca-Cola, and Cisco Systems. Now, investing in a single theme like dividend stocks is going to be riskier than that diversified portfolio like the 60-30-10 combination that we looked at, but these cash-paying stocks tend to be less risky than others, so it's still a fairly safe way to play, and an 11.3% annualized return. It takes over just 6 years to double your money if you're reinvesting those dividends. Before I show you how to put all this together next, the highest return and fastest way to double your money is going to be in those fast-growing tech stocks, like those in the iShares Expanded Tech Sector ETF, ticker IGM. And here, while most of you are probably more familiar with the NASDAQ 100 ETF, the QQQ, as a tech stocks investment, I like the IGM better. That's because the QQQ invests in the 100 largest non-financial companies on the NASDAQ index, which tend to be those tech stocks. But you've also got a lot of decidedly non-tech companies like Costco, Pepsi, and T-Mobile in the fund. The IGM, though, is all tech all the time, with shares of 281 companies in the tech sector and tech-related communication services like Meta, Apple, and Microsoft. It has been a tech decade, and there's no guarantee it's going to hold up, but with a 19.7% annualized return over the last 10 years, that doubles your money in just 3.5 years. Growth every investor needs. I'll show you how to combine these last two and turn just $150 a month into a $1 million portfolio next, but if you want to beat even that 17% return, check out the stocks in this video. I've invested over $500,000 in these 10 stocks, my favorite growth stocks for the highest returns. Now, combining those last two stocks, for example, splitting your money with 7 of every $10 in the IGM fund of tech stocks with its 19% annualized return, and then the rest in the SCHD dividend fund with an 11% return, gives you a 17% average return. The relative safety of those dividend stocks, and the motivation from seeing those dividend payments hit your account. And as little as $150 a month and something as simple as that 2-stock portfolio can do something amazing for your money. At a 17% return, you grow that $150 a month. Way cheaper than that ugly-ass pair of sneakers you just bought. Just $150 a month can make you a millionaire. And in fact, it's way more than doubling your money. Over that time, you invest just $52,200 and grow it to a 7-figure payday. Now, I know 29 years seems like a long time, so invest a little more and speed it up. Invest just $250 a month, and you get there in 26 years. Or if you can swing $500 a month investing, you'll become a millionaire in 22 years after only having invested $130. You'll have grown your money by 8 times over. Your business can't afford to miss deals because of security reviews. Experience Vanta's questionnaire automation with a product tour. Just look for the link in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.